All right, joining me once again here on the Matthew Filipowicz Show is my friend Les Leopold. Les is the executive director of the Labor Institute and the Public Health Institute in New York. He is the author of the great book, The Looting of America. You can find him on Twitter at Les_Leopold. Les, thank you so much for being on the show again.
Thank you very much for having me.
All right, so Liz, you have a great new piece currently up at Alternet where you argue that Wall Street itself is the cause and the solution of the phony fiscal cliff crisis. Why don't you tell us all about it?
Well, I'm struck by this kind of financial amnesia that sets in when we start talking about government debt. I mean, the only reason we're having this conversation at all is because Wall Street drove the economy right off the cliff. That's the real cliff. Killed 8 million jobs in a matter of months. And we've had to go and spend a whole lot of money to make up for the problems that they created, and they've been asked to pay none of it back. So the conversation that's going on in Washington about the fiscal cliff doesn't even mention the words Wall Street, and it's an absolute travesty.
No, you're absolutely right. I mean, while there at least is discussion about slightly raising the taxes on the richest Americans, again, we're completely ignoring that, like you're right, the actual cause and the reason why we have so much trouble right now.
Yeah, here's the if you're going to talk about raising taxes, there are two taxes that are absolutely critical. Not just for paying back, dealing with the deficit, but for taming Wall Street. One of them is this thing called carried interest, which is a special tax break that private equity funds and hedge funds use to avoid having to pay full tax rates. So they're not paying 35%. They don't have to worry about going 35 to 39. They get their income at the 15% level, which is it's not just capital gains. It's some special version of capital gains called carried interest, put in the 1950s to help very small businesses like restaurants, et cetera. But now it's been, of course, used and abused by the very wealthiest people in the country. If that's not on the table during the discussion, you know the whole discussion is phony. That's number one. Number two, that could settle virtually all our financial government problems would be a financial transaction tax, or what they call Robin Hood tax, which I think actually is a misnomer, because what it is a small sales tax on buying and selling stocks, bonds, derivatives, and all the fancy things that they buy and sell rapidly, like a million times in a second. If there was a small tax on those transactions, it wouldn't affect the rest of us at all. 99.9% of it would be on the big players, and it would move money out of Wall Street and back into the real economy. Wall Street's gotten much too large, and that's why we suffered such a tremendous crash, because they became gargantuan compared to the rest of the economy. Those two taxes are the ones to watch: financial transaction tax and doing away with the carried interest tax. Otherwise, what they're talking about isn't going to affect these people.
Yeah, and we've had some people on from like the Robin Hood tax group on the show before to discuss it, but it really is an amazing idea, because it really is. It's not even. It's like a fraction of a penny tax on every single solitary transaction, where you have all of this trading going on done by computers by the microsecond, where all these all these constant stocks and things are just being constantly shifted back and forth, kind of like the tides of the ocean in some ways, but they actually aren't even really being controlled by human beings saying, oh, I want to invest in this, I want to invest in this. It's all done on these like kind of tiny little levels, so they can squeeze out a half a second more of profit out of something. And it really does sort of skew the entire idea of investments to begin with, where the general idea is, oh, I'm going to invest in a company because I think this company is going to do something good. This company is doing good work, or is going to make a good product. It's all about these tiny little seconds, and the fact of the matter is, the fact that the stock market is skewed that way now, it really just sort of, the whole entire market itself is sort of a sham when it's done on such an absurd microsecond level. Right,
and where does that money come from, that those little points that they're shaving? it's quite a remarkable story. For example, when your mutual fund, or let's say you're on E-Trade, the average person trying to buy or sell something, what happens is before you can press the button and get the price you think you're going to get, it turns out you'll probably pay a little bit more because they see you coming. And they bump up the price. They buy it ahead of you and sell it back to you. The computers are doing this automatically. These are traders that are operating at this microsecond level. So they literally get in there before you make your trade. By the time you press your button and the trade goes through, they have bought and sold it back to you. So the profits that they're making, it's estimated somewhere between $5 and $20 billion just from these high-speed trades. That profit's coming from your pockets, from the average American's pockets, from their pension funds, from their mutual funds. That's where the money comes from. They're not taking it just from each other. It's not just a game of gambling where rich people are, smacking heads against each other. No, it's coming from the rest of us, and we need to put a stop to it.